Hey guys, Dave again, welcome back. So in this video, I thought we'd go ahead and tackle a new bill that just hit the Wyoming legislature. So it looks like Wyoming wants to go ahead and start to dabble in some taxation, especially on that revenue side. So basically, before you get upset at me and you start disliking the video and you're like, no, taxation, bad, bad, bad. Not that. So let's get into it. So House Bill 138, it's been submitted by Rep. Schwartz and is co-sponsored by two reps, Connolly and Zwonitzer. I'm sure I'm butchering that person's name, sorry about that. And two senators, Kost and Rothfuss. So the fact that it's got a bunch of co-sponsors tells us that it has some legs, and it's something we definitely need to keep an eye on. So what is this HB 138? So HB 138, it was submitted and it got a number on 2/24. So 3 days ago. I'm filming this on 2/27. So basically this bill right now, as it's submitted, is known as Wyoming's Unearned Income Tax Act. And in my opinion, it's a direct shot at everybody in Teton County. But we'll get into that. So basically, what they're trying to do is they're trying to tax unearned income. So I'm sure you guys are like, what's unearned income? So unearned income, as defined by the IRS, unearned income includes investment type income such as taxable interest, ordinary dividends, and capital gain distributions. It also includes unemployment compensation, taxable Social Security benefits, pensions, annuities, cancellation of debt, and distributions of unearned income from a trust. So basically, Wyoming wants to go ahead and start to tax all those types of income that come into you. So basically, how they're going to do it, we'll get into the levels of income that are going to get taxed. We'll get into the tax rates that are coming, and we'll sort of see what it is that they're really trying to do. You can discern for yourself who they're trying to target in this one. And this is only part one of taxation that's coming down the Wyoming pipe. There's going to be a part two. It'll probably make this video a little too long. It's a little bit complicated, and they're sort of separate channels all kind of tied into one. So we'll do it in a second video. But in the rest of this video, let's focus on this HB 138. Okay, so basically in this bill, they're going to reach out to the IRS and get your federal tax return, and they're going to look for this unearned income. So basically, unearned income is going to be any activity that isn't taxable in another state. So if you didn't pay taxes on it anywhere else, Wyoming's going to consider that unearned income, and you're going to go ahead and pay tax on it. So just cha-ching, cha-ching to Wyoming. If you did pay taxes on it in another state, or you pay taxes on some portion of income that you got in another state, that'll get separated out, and then you just go ahead and you take the remainder, and it's going to be the multiple, and then so basically you pay a percentage of. They're making sure that you don't not pay on any unearned income. If you didn't pay on it somewhere else, you're going to pay on it in Wyoming is basically what it's saying in this section. So the tax rate, and I know we got a lot of bowlers that watch this channel. You guys are making money. You're out there killing it. Love you guys for it. So it may apply to some of you. So especially if you've got a lot of dividends. If you've seen my $15 an hour video, I'm a big fan of dividends. So watch that, keep an eye on that. But basically, if you make less than 200 grand a year in unearned income, you're going to pay 0%. So a large swath of the population will not be affected by this in all reality. Now, the people who are affected by this, let's say you make over $200,000 a year in unearned income, you're going to pay 4% tax on that $200,000. So while not a huge number, still a sizable number, enough that you just don't want to pay more taxes. And this is sort of the gateway into income taxes, if I'm to be honest. This is to begin to set all that up. So you're subject to audit, and you're subject to be looking to be reviewed for this for 3 years, sort of like your standard federal taxes. You got to keep all of your receipts and all of your records. I highly recommend that if you're remotely involved at this level, that you keep all of your records. We'll get into the penalties here in a minute. They're ridiculous, but we'll get into them. So let's see. So if you're snagged in this and you're found guilty, and in typical Wyoming fashion, it's super complicated. So let me try to break this down as best I understand it. So basically what they're going to do is they're going to apply an annual average prime interest rate plus 4% to whatever it is that you owe. So what's an average prime interest rate? So really good question. I had to really dig into this. So the state treasurer will average the prime interest rate for at least 75% of the 30 largest banks in the US. Now notice it doesn't say 75% lowest prime rate or highest prime rate. Let's go ahead and take a guess at which one they're going to choose. I think we all know. Anyway, so they'll go ahead and derive that, and then it goes on to say that any delinquent rate cannot be less than 12% or greater than 18%. Why didn't we just skip all that and just say 15% and be done with it? But anyway, so know that your annual interest rate is going to be somewhere between 12 and 18%. Knowing these clowns, I'd say it's probably going to be closer to 18%. So, and that's if you just sort of turn yourself in. If they feel like any part of a deficiency or non-payment is due to negligence, or AKA like, hey, I didn't know I needed to pay that, then there's an additional 10% tacked on. So you not only have to pay your 4%, you then have to pay your 10%, and then you have to pay your interest for however long it was, and that interest is between 12 and 18%. So yeah, that's pretty sizable for I didn't know and you weren't trying to defraud anybody. Now let's get into what it costs if you were trying to be on the shady M&M style. So basically, if they feel like you were trying to hide it, it's an automatic 25% penalty plus the interest. Okay, so if you defraud them and they catch you, and let's say it's year one, you're looking at somewhere between 37 and 43% of whatever it was. That's a huge number. Like, that's so much money. Pay your taxes, move to another state that doesn't have taxes. I thought that's where we were, but so if you don't pay and they catch you, basically what's going to happen, they'll put a lien on some of your property. It won't be a primary lien, it'll still be a tax lien, so your original debtor will still have first right to recoup their money before the state does. But if that asset's paid off, then they could theoretically take it to auction and sell that to recoup the tax money. So be aware of that. That's over and above. The other piece I didn't tell you on the tax rate, on the penalty rate, you have 10 days to pay it. So if they catch you, you're found guilty, you have 10 days to pay it. Now, you can appeal it to the State Board of Equalization. Now, in order for your appeal to be heard, you have to pay the taxes first. So, in the rare instance that the board will let you defer payment until after the hearing, they continue to charge you interest while the hearing is going on. So really, it's just a money grab. This is pretty embarrassing for Wyoming, in my opinion, to go after unearned income. Granted, it doesn't affect most of the residents, and there are a lot of people that live here from out of state and use it as a tax shelter, so I get that side of it and where they're coming from. If you're here and you're successful, get ready. And we'll get in part 2, which I'll put out later this week. I still have a little bit of research to do on that one just to make sure I have all my facts straight. That one's a little scary too, so get ready for that one. The things that Wyoming's trying to do and who they're trying to partner with on that is frightening. But yeah, if you've got unearned income over 200K, based on the number of sponsors on this one and the budget shortfalls that are going on in Wyoming, I think this one's got a reasonable shot of passing. Unfortunately, I definitely don't want it to. I feel like this is the gateway. It's sort of how income taxes started for the federal government back in the day. They taxed the rich, and then they just never raised the barometer. And then as inflation comes along, more and more people fit into the mix. You're seeing a lot of people dabble in Robinhood and do some different investments. Getting to the point where you have a lot of unearned income really isn't that hard, and really isn't that unfathomable. So be ready. You might get caught up in this mix sooner rather than later. I hope you don't. I hope it doesn't pass. Go ahead and write the senators. I put their images up as we were talking about them. Write those guys. Tell them stop this nonsense, and I'll catch you guys in the next one.